Hello and welcome to another Smaulgld live stream. Today is September 11th. It is Tuesday, 2018. Tonight we're going to be talking about, is gold an asset? Is it money? Is it insurance? Or is it an investment? Before we get to our topic, let's just take a look at a couple of things that happened during the day. We had our 9/11 ceremonies commemorating, I think it was the 17th year since the 9/11 attacks. Now, in the markets, gold market, gold moved up a little bit. It opened at 1193, rose all the way to about 1199, and that ended up the day slightly up at 1196. Silver, JP Morgan, going long silver, got all that gold, silver stacked away. Well, silver opened at about 1414 and dropped all the way to 1392 and closed down on the day at about 1409, putting the gold silver ratio at about 85-1. Over on the crypto side, today there was a little news on the cryptos. They were talking about a judge had ruled that ICOs can be deemed securities. It's not really news. That's been the case. Most legal commentators and also the SEC took that view. And actually, it ties into somewhat of our conversation tonight about whether gold is an asset, money, insurance, or investment. The question is, what is a cryptocurrency? And they're not all the same. And what they ruled on today was that a ICO, which is essentially just a cryptocurrency token that is issued generally in respect of a company or a DAO, and the token's value will be based upon the activities of that organization. So if the organization is a success, then the token will rise in value. If it's not, the token will down, similar to a stock. A stock will rise or fall, or should rise or fall, on the basis of profits and loss or revenue or other newfangled ways that they have of valuing the stock market today. But they ruled that obviously ICOs can be securities. Now, other cryptocurrencies are different, like Bitcoin and Litecoin. They're not really issued. There is no issuer. Bitcoin and Litecoin rise or fall not based on any earnings, not based on what anyone does. There's no way you can improve Bitcoin, really. People can write, but it's just like open source code. People can write code, layers on top, lightning networks, and so on. That may add value to Bitcoin, but there isn't a company that's going to benefit. There isn't a Bitcoin corporation or LLC that is in charge of all the Bitcoins and directing the activity of Bitcoin. That's going to give us a, well, let's tell you the prices, and then we'll get into our discussion and get your thoughts. Bitcoin closes, or never closes, it's trading somewhere, and it's trading 24/7 on Coinbase. Those are the numbers I'm looking at right now. $6,277, just about a quarter of a point off on the last 24 hours. Bitcoin Cash, though, a bit bigger hit, 438, down about 6%. Ethereum. Now, Ethereum got hits down to 184 because a lot of ICOs use Ethereum to fund it. And a lot of ICOs have either gone bust or had trouble, and they've sold a lot of their Ethereum. And then also the thinking is that there'll be less demand for Ethereum if ICOs become regulated. That may or may not be true, but at least in the short term it'll be true. One of the things people don't realize is that they're not banning or outlawing ICOs. They're saying we can find people liable for violating the securities laws if they don't register their ICOs with the SEC. But the SEC is not saying, they're saying there's a website, sec.gov/ICO, where they tell you how to do it. It's just that a lot of ICOs have probably been scams, and the people issuing them knew they were scams, and that's the last thing they wanted to do, was to bring their plans and their prospectus and their white papers to the SEC for review, because they wouldn't withstand that type of scrutiny. However, in the future, you may see registered ICOs coming in with bigger and better backing than a lot of these ICOs, which were nothing more than a pipe dream, a white paper, and some YouTube promotion. Litecoin is at $52 right now, and it's down about 4%. All right, let's take a look at is gold an asset, money, insurance, or investment? Why don't we take, is it insurance first? Because it's a very popular view that gold is insurance. Now, for insurance, I would say it doesn't meet the technical definition of insurance, because insurance is something that you take out as in the form of a policy. When you take out an insurance policy, there is someone who underwrites, or an organization that underwrites that policy, and you pay a premium, which is a certain amount each month, or maybe you pay a one-time amount to determine if an event happens that you will be made whole. So the most common insurances that we're aware of are things like life insurance, home insurance, car insurance, health insurance is another one. And you pay small amounts of money or large amounts of money each and every month to insure against an issue with what you're insuring against, that your house burns down, that you get sick and can't pay the hospital bill, and so on. Now, you could view gold as insurance. You buy a small amount of gold each and every month with the understanding that, yeah, I might be better off buying something that's going up, like Tesla or some internet stock or something that is going to show me a outsized return, capital gain, or is going to pay me dividends. So rather than buy that, you take your insurance and you every month you buy a certain amount of gold, and the understanding there is you're not trying to get rich from the gold. The gold is going to act not only as a store of value, but insurance in case your other investments go down. So in the example that everyone thinks about is you have an overvalued stock market, you have a large amount of debt in the system, and if the debts can't be paid, well, gold is unencumbered. You don't have to worry about getting paid back on your bond, and you still have the gold. So that gold relative to credit bursting will rise in value because it's not going to lose its value. It's not going to default. It doesn't owe any money. But your other investments, you're owed money and they can't pay. So your insurance, if you look at it that way, pays off. Now, there's no company that's in some respects makes it better, because you could have insurance from an underwriter and the underwriter goes bust. And you may have insured your house, your car, your health, your life, whatever it is, and you want to get paid on it, but the insurance company can't pay. Whereas gold is not going to default in any way, shape, or form. Or the other reason you'd have insurance would be the stock market. You've got all these overpriced biotech stocks, .com stocks, social media stocks, and the price of those tumbles. Well, generally when you have a stock market collapse, you do see an increase on a relative basis to gold. Let me pull up a chart. I can show you there's somewhat of a correlation between the Dow and the price of gold. Obviously, when the Dow goes higher, generally gold does it. Now, we have some interesting things going on nowadays with people viewing U.S. stocks as a safe haven, just like they do the dollar. So it's interesting that gold actually has been competing with the dollar as a safe haven. And oddly enough, I would say it competes with I don't agree with this, but there is a theory out there that holding U.S. or dollar-denominated assets, like I'm going to get this chart up for you, like the U.S. stock market, is somehow a safe haven. I don't believe that, but that's the world in which we are. Let's see if we can look at that chart of the Dow Jones versus the there it is, versus gold. And when you have a flat stock market, generally gold does pretty well, but if you have a roaring bull market, it's hard for gold to keep it up. And let's see if that's come up on your screen there for you. It should be coming up in a second because it's up on mine. But when you get the chart, you'll see really since 2017, the stock market has made a pretty much a beeline straight higher. And you do see that period in 2016. You do see the period in 2016 where gold was outperforming the Dow for, I would say, most of the year. And then Trump gets elected, and you could see that election inflection right there towards the end of 2016. The stock market goes higher, it levels out for a while, goes higher, then zooms straight higher again. And that's where the Dow starts to dip below. Although it managed to hold above the Dow, the black line is the Dow, the gold line obviously is the gold. And it's only recently, it was holding its own through 2017, through most of 2018, either higher or slightly below, but mostly higher. In fact, gold has been higher than the Dow really since 2000, this entire chart, other than you can see that last run up in the stock market and the last 5-6 months of 2017. So gold can act as insurance, although I wouldn't say it fits the definition of insurance using that word. I would use the word hedge, be interested to see what you guys think. I wouldn't call it insurance. I would say it's like insurance, but obviously it's not the same as insurance. It's akin to it. So I would say gold would be a hedge against stock market drops, credit defaults, things of that nature. All right, let's take a look now at another one. Now, is gold an investment? Now, we just talked about these ICOs versus Bitcoin and Litecoin. An investment is generally defined as something where you have, how do I put this? Where you are going to profit from the benefit of the labors of others, and you're not really involved in it. So you put your money in a company, and you expect that the people in that company know what they're doing and that they're going to do a good job. And as a result of the good job that they do, the value of the securities that you buy are going to go higher. Or you lend them money, and you have to expect or hope that whatever they do, they're going to be able to generate enough money to pay you back. That's what an investment is, and that's what an ICO would be. You're hoping that the DAO, the entity is going to be able to generate some value such that your token will go higher. That's an investment. So when people say they invest in gold, I say they don't. The gold is not an investment because gold isn't going to do anything. This is the thing that Warren Buffett always criticizes gold for. He makes that very famous statement, and it's supposed to be a bash on gold, but I actually think it's a positive statement about gold. He says, if you take gold, you own it, you melt it down into a cube, you check back years later, you observe the cube, it's unchanged in size and still incapable of producing anything. You can fondle the cube, but it will not respond. Yeah. And I think that he's missing the point. It's not an investment. He's trying to compare the stuff that he buys, which are companies that produce income, maybe innovations. Those are investments. You're relying on somebody to do something. And he's looking at gold and saying, see, gold doesn't do anything. Well, that's the point. On the flip side, gold doesn't do anything bad. Gold can't embezzle company funds. Gold can't go bankrupt. Gold can't default. Gold can't get thrown in jail. Gold can't run a Ponzi scheme. So gold is not meant to be an investment. An investment is something where you place your trust in a group of individuals and you expect to get something out of it. And so when Buffett trashes it as not an investment, he's missing the point. You don't buy gold because it's an investment. We already said you might buy gold as a hedge or insurance against your investments not doing well. That's the point. Now that we know what an investment is, I would say, and we'll go through your comments after I get through this, I would say that gold is not an investment, and that's not a bad thing. A lot of people say, I'm investing in gold. Well, if you're investing in gold and expecting a return, that doesn't make any sense. It's not going to pay a dividend, as Warren Buffett says, but it's not supposed to. And it's not going to rise in value, because what is gold going to do to make it rise in value? Nothing. It can't do anything. But that's the beauty of gold, is that it's not going to do anything. In fact, like he says, you can melt it down, throw it somewhere, leave it there, and then you come back and there it is. It's still there. It's incapable of producing anything. He says you can fondle it, but it will not respond. Also, you can't bribe gold or lobby gold the way maybe Buffett does. You can't get favorable legislation so that gold goes higher or gets a tax. You could get a tax break, but that's nothing to do with gold. All right. So the way I look at this is that it's leading me to my conclusion that gold is an asset. And I view an asset as something that you can touch, fondle if you wish, and it will retain its value, or maybe not forever, but for the period of time in which you want to enjoy its property. So a horse is an asset. A car is an asset. Now, they could be depreciating assets or assets with a limited lifespan, but they still are assets. They're things that you hold and you don't expect, unless the horse is a racehorse. You don't expect that horse to make you any money. It's something that you own. It may even cost you money to own assets, like a car, and the car may go down in value, but it's still an asset. But the difference with gold as an asset, it may not produce anything, but it's not going to cost you anything. It may cost you storage and insurance, but generally that's not a lot. And it's something that's not going to go away. It's one of the few assets that is immutable, and not only is it rare, but it will last forever, at least your lifetime and the foreseeable lifetime of your progeny. It doesn't require any special attention. It has immutable characteristics. And here's another quote from Buffett. Again, it's meant to be a smack at gold, but it's not. It's actually a positive statement. He says, "True, gold has some industrial and decorative utility, but the demand for these purposes is both limited and incapable of soaking up new production." But here's the killer sentence that he thinks he's making his coup de grace point here. "Meanwhile, if you own 1 ounce of gold for an eternity, you will still own 1 ounce at the end." And that's the point. If you owned if you owned a share of a company in the Dow in 1918, I don't think any of those companies are still around. So those assets or those investments in the Dow stocks of 1918 or whatever year, you can own them, but they're not worth anything. So investment generally has I remember I had a discussion with someone about 20, 30 years ago about an investment in a BIOS company. And he said, well, in 5, 10 years, they'll have some other technology. And I said, yeah, they will. But over the next 5 or 10 years, this company may sell a lot, may have a lot of licensing agreements, and may go higher. I mean, if you look at any company right now, I can dismiss Tesla, Facebook, any company. It's not investment advice, and it's any company, and tell you that I think that in 20, 30, 40 years, maybe even shorter, that company won't even be around. But that's not how investors think. They think short term. Now, assets, too, have limited lifespans. So what I'm getting at is that gold is an asset, and it is, as Buffett says, an eternal asset. Yeah, it's not going to produce your income, and it's not going to do anything, but that's not the point of it. That's a feature, not a flaw, because it's not going to default, it's not going to mess up, and it's going to be there longer than you are. So I'm leaning so far, as we've gone through our choices, is it an insurance? I say technically no. I think it acts as insurance. I say that it has it's a hedge, which is a form of insurance. Is it an investment? I say absolutely not. I don't expect it to return dividends. I don't expect it to go higher. The price may go higher, but not because anything gold does, because what happens around it. So I'm going to go with, is it an asset? Now the last one is, and this is the most controversial, is it money? You know, we always hear the famous J.P. Morgan quote, which actually is always misquoted. People like to say that J.P. Morgan said, gold is money, period. No, he didn't say that. They like to say that he says, gold is money and everything else is just credit. Actually, he said, I think he said, money is gold. No, now I'm confused here. Let me look it up here. He didn't say gold is money, period. That's for sure. And he didn't say gold is money and everything else is credit. I think he said securities do not always prove good. Money is gold and nothing else. Now the thought there is the same, that basically gold is money, money is gold, and pointing to the fact that it doesn't do anything, whereas credit requires, or investments, or as he says, securities. Just as we said, securities or equities, you rely on someone to do something. Credit, you rely on somebody to pay you back. And I think as James Turco, he says at Gold Money, he says gold is not someone else's liability. It is you and you own it. So it's in a sense not debt-based, and you're not relying on anyone in trying to improve it. So that's where I come down on gold being an asset. Now, is it money? You could say J.P. Morgan said it's money, but I don't like that definition. I like the classical definition where you look at the characteristics of money and then you say to yourself, all right, does gold fit the characteristics? Now, historically, gold has been money, the most perfect money, and I would say silver and copper are also very, very close to that, in that they meet the classic definitions of what you would want, at least until the last 30, 40 years, to be the superior form of money. Now, through history, there's been many things that have been used as money, but a lot of common definitions include, they want to know is the money, if you're going to call something money, is it durable? And that's why seashells are not really the best money. They could break. Gold is more durable than copper or silver. Silver tarnishes, probably the next best thing. Copper can kind of get rusty. Gold doesn't even tarnish. So gold is definitely, you give a check mark right there. Is it divisible? Absolutely. In fact, gold is probably easier to divide than silver or copper because it's so soft. In fact, you can divide it a lot because you can hammer it really thin very easily. Make thin gold coins like the ones that I had on that stock photo when we first started looking at this video. Silver is harder to work with. Not that silver is hard to work with or copper is hard to work with, but gold is divisible. It's durable. Is it fungible? Absolutely. You can melt gold down. You can have a unique gold bar, a unique gold coin, rarest gold coin in the world. You can have serial marked bars. You could take that gold, melt it down, and bang it out into 20 or 30 1-ounce coins, and it's all an ounce of gold is an ounce of gold as long as it's of the same fineness. So it's durable, it's divisible, it's fungible. Is it a store of value? Well, as long as people like what Warren Buffett mentions, that it is something that people find attractive, if it's useful in industry, well then, yeah, it's going to be a store of value because people want it, and also because it is of limited supply. That's what also makes gold money, or meet the characteristics of money, because if there's a limited supply of it, and if people want it, that's going to almost guarantee that it's in short supply, even not too short of supply, that people will want it. And then the other ones are, is it acceptable to people and this ties into as a unit of account. Well, yeah, if you make it in the right sizes, gold clearly can be knocked into units of account. 1 ounce of gold, ½ ounce of gold, 1/10 of an ounce of gold, 1 gram of gold, whatever it is. And then once you have it in those forms and you realize it's durable, you can use it a lot, it's divisible, it's fungible, people will accept it, it's a limited supply, people want it, it can be banged into unit of accounts. Therefore, it can be used as a medium of exchange. And therefore, that leads many people to conclude that gold is indeed money. However, I come out, and not that it can't be both. It could be all three. It could be an asset, money, insurance, or investment, although I clearly think gold is not an investment. I think that gold is a form of insurance, just doesn't meet the definition of insurance with an underwriter, company that's going to back up and insure your life or your car or your house. I clearly think it's an asset, just like a car or a horse or a house. But as to money, I think it meets the characteristics, but it's no longer a usable form of money because while it can be a unit of account, and it is, it's not widely accepted in exchange for goods and services. You'd have to convert it into some other form, and therefore it's not a medium of exchange. So I'm coming down that gold is no longer money. It once met the characteristics and meets all of them, other than it's not ideal anymore. People are not walking around with gold coins looking to make purchases. Now, that doesn't mean as an asset it's not valuable. I used the horse example. Horses used to be transportation, period. They met all the definitions of transportation, but no one uses horses anymore for transportation. So horses are an asset. They're either an asset for rich people to have, but people do not own horses so they can get from one place to the other. And people do not own gold so that they can buy stuff. Not directly. They may like to cash in the value of their asset and go and buy things with it, but they're not using it as a form of money. So let's just take a look, though, that with gold as an asset. So if you want to invest in gold and you want it to go higher, I would say gold mining shares are investments. But gold itself is an asset. A car is an asset, but a taxi is an investment. Why? Because you're not using the car for your benefit to get from one place to the other. Car is transportation, period. But you're using the taxi in order to get a return. And it's going to require you to keep the car in shape, make sure you have passengers. Land is not an investment. People say, I'm investing in land. That's the same as saying you're investing in gold. You're not. A farm is an investment because you have to add labor to it and a corporate structure or family structure in order to figure out what you're going to farm, how much is it going to cost you to farm it, and how you're going to sell your produce or your livestock. So land is an asset, a farm is an investment. Gold is an asset, gold mining shares are an investment. Car is an asset, taxi is an investment. Your house is not an investment. I'm investing in my house. No, you're not. You own an asset. You paid money for it. And unlike gold, you have to pay upkeep. You have to pay taxes. But real estate that you buy for renting out, that's an investment. So that's what I think. Let's see what you think. There's a lot of people get upset when I say gold isn't money, and gold has been money for 5,000 years. What do you know? Period. So on and so forth. I come down, not that I'm trying to limit it, is that gold is an asset, a valuable asset, could be used as money, just like a horse is a valuable asset, could be used as transportation, and it's a form of insurance. All right, let's see what you guys think. All is one says hello. Hello, Bogus Fiat. Carlo Joseph DeMarco is here again. Hello. Dano says hello. Bogus Fiat says gold may very well be money, but certainly is not a currency. Yes, but Bogus Fiat, I want to get your thoughts on this. It says when you look at the definition of money, money includes the characteristics of being a currency or a medium of exchange. And while you and I can trade gold or silver coins, that doesn't make it widely acceptable. That means we could do it, but the world doesn't do it. So gold is not used as a currency anymore, and therefore it's missing out on one of the prongs of the definition of money, at least how I define it. To answer the question in the title, yes. Well, I'd say it's yes, used to be, kind of, and no. Yes, gold is an asset. Money used to be, gold used to be money. Gold is sort of insurance, and no, gold is not an investment. Small gang is here. There you go. I invest in tulip bulbs. Now, I'd say that's the same thing. Tulip bulbs, gold, Bitcoin. I'm not making value characteristics. I'm saying those are assets. Nothing's going to happen to the tulip bulb to make it more money other than somebody wants to pay more for it. Same with Bitcoin. Bitcoin's not going to do anything. Gold isn't going to do anything. A piece of art is also an asset. Picasso, Juan Miró, that's art. Those are assets. They're not invest. People say, I'm investing in art. No, you're not. Now, you could invest in an artist, and you could say, dear Mr. Juan Miró, I will pay you $50,000 a year salary. I want you to give me 3 of your 10 paintings every year, and then we'll sell them in market, and I'll get half of that money, and then I'll pay you more. That arrangement is an investment. But just buying a painting, that is not an investment. That's an asset that you have. Buy the dip. Full name, why has gold gone up in many currencies? That's because, not because it's money, because it's an asset that's valued very highly against currencies. It's not like the people are in those currencies, the bad currencies, the ruble, the Turkish lira, or any of those bad currencies, Iranian rial, are now saying, okay, we don't want the rial, we want gold. That's true, but not for the purposes of using it to buy stuff generally. They may, and that's actually when gold becomes money again, silver too. When your currency, there is no currency to use, so then you would use. That's the great thing about the gold not being money at the moment, or silver, that it can be called into service without a problem in the event of a crisis, and that's why it's valued. But when you don't have a complete currency crisis, like you don't have in the euro or the yen or the dollar or any of the other major currencies, gold is not money, it's an asset, and it's valued as an asset just as other assets are valued. So when gold goes up supposedly in a currency, it's because people will pay more of the fiat currency for that asset. So beer, wine, artwork, they're also assets. They're things that you have. They don't do anything. They have different characteristics, whiskey, cognac, whatever it is. They also go up versus the dollar or the yen or whatever currency it is, because the currency is worth less versus those assets. So in areas where gold has gone up in many currencies, so has the price, so has beer, so has wine, so has milk, so has art, whatever, all the items. Now, the reason that gold or silver may go up more as assets against those currencies is because then you can bring them into service as money, which makes their value go even higher than, say, beer or milk or so on. So when I say gold is not money, I'm saying generally today it's not, because the monetary system doesn't use and trade gold, and people don't, other than in situations where they, in a sense, maybe have to, because we've moved into digital currencies. And I don't mean Bitcoin. I'm just talking about euros and yen and dollars. When you buy stuff, most of you in your day-to-day life are spending money day-to-day, either credit card, a debit card, or cash. You're not spending gold and silver coins. And for that reason, I'm saying that gold is not a medium of exchange. Doesn't mean it wasn't. Obviously, it was for hundreds and thousands of years. And doesn't mean it can't be. It just means that today people don't choose to use it because it is more inconvenient to use than it is to use your current cash, credit cards, debit cards, or even checks. All right. Hello, Ed Mall is back. Good to see you. Prashanti Girl, which has never happened in history. Oh, yes, gold and silver could go to zero if no one wants it. Yes, but which has never happened in history. Gold and silver will probably, as long as there's a civilization, always have at a minimal value of, if anyone has any money or any wealth, at least to wear it, because they're shiny and they're nice looking and they're status symbols, and I don't see how it goes to zero on that. And then if there's any civilization, modern civilization, just the fact that you have electronics, you don't need solar energy, so I'd say, well, that's not a reason. And you don't even need photography. That used to be a silver demand. But probably electronics, there's probably going to be, because of the industrial uses, again, if there's still a civilization, there's going to be a need for gold and silver, unless they figure out ways not to have it. And then still, I just can't see how you would leave a pile of gold and silver on the side of the road and there's a civilization. I'm not talking about the road. Why people wouldn't pay for it. I don't think you could just leave it there and say it's not worth anything. So I don't think they could go to zero, because I can't imagine no one not wanting it, other than in situations where there is no civilization and you're really just trying to survive. But generally, the thing about a civilization is you're past just surviving, and then people want to store wealth and people want to buy stuff, and then people may, even if it's not money, may want gold or silver. I still bought when I saw silver go below 14. Yeah. Okay, Carl Joseph DeMarco, you can plant a tulip bulb and make more tulips, which will make more bulbs. So tulip bulb could be, well, that's clever, yes. You could say I'm investing in tulip bulbs, not just to have the bulb, but because I'm going to grow an orchard, and then I'm going to, it'd be an investment in, maybe like your initial investment to make, maybe you want to make a flower arrangement and sell flower arrangements, and you need tulips. So yeah, there could be not an asset just to have. So it depends on your end use of the tulip. If you just want the tulip to put in the ground as a bulb or a hole, that's just an asset. If you're going to add labor to it and then make it into something, then it's an investment. You're right, Mr. DeMarco. Yep. What do you think of a monetary reset? When do you think it will happen? Well, there's an assumption there that I think it will happen. I don't think it'll happen, at least maybe not. Everything is inevitable. I mean, all systems end. They may not end by reset. They could just collapse. I mean, I don't know. A lot of people, this is the thing, like with the JP Morgan, a lot of that they have X amount of silver. A lot of these speculative narratives and memes in the alternative financial media are stated as if they're facts when the reset happens. And then everything flows from there as if that's a fact. It's a mathematical certainty, or JP Morgan has X amount of silver. Those haven't been established. But then everything flows from that. And I don't start there. I wonder, will there be a reset? Why would there be a reset? Would gold be any part of that reset? Maybe not. That's part of the reset theme, is that when the reset happens, they'll be forced to use gold and silver. Why? Who's going to force them to do that? Will it be the bankers themselves? No, the people will rise up. No, they won't. People don't know anything about gold and silver. I like to use the Mark Dice analogy. And granted, maybe he's talking to morons. I don't know. But if you ask the person in the street what's valuable and you offer them a chocolate bar or a bar of silver, they take the chocolate bar. They'd be more likely to demand that the currency is backed by chocolate than gold or silver. That might not be a bad idea. Where's Barry? I would like to hear his thoughts on this too. Also, with the coming term, what percentage PMs would he hold? I would think, this isn't investment advice, and it has nothing to do with me. It depends on what you view gold as. If you think gold is an investment, well, then you're going to look at it entirely different. So I don't look at it as an investment. If you have investments and you think gold is insurance, you'd have to do a calculation as to how much of your portfolio, you'd want to insure based on what you think the value of the insurance is. Meaning, it's not like insurance where you say, okay, I have $40,000 worth of investments and I want to insure against that, so I'm going to pay a premium every month. And if my investments go below $40,000, this insurance will pay for it. You really don't know whether gold will even act as that insurance. So you'd have to calculate how much your investments were and how much you thought, that's where it gets tricky, how much you thought that the gold would act as an investment. I mean, as insurance. And you really can't tell. But you could make a calculation. And again, if you look at that chart, I think it's still up on the screen there, yeah. There's not really a tight correlation there. So you'd have to make your own calculations as to how much you thought gold would rise relative to the Dow to offset your losses in the Dow. And again, history isn't really that helpful in coming up with that number. So you really have to wing it. And a lot of that would depend on how badly you thought your investments in the Dow were going to go down versus how much you think that gold would go up relative to the Dow. Now, if you have other investments, it's even harder because it's just harder to find data on how gold does against, I don't know, if you had investments in arts or, I don't know, what, collectibles of some sort or other investments, farmland, farmland, I don't know. All right. Is there anything that could be an asset, money, insurance, or an investment? That's a good question. Clearly, gold can be an asset, money, and insurance, hands down. It can't be an investment because it doesn't, in my definition, gold can't be invested. That's not a bad thing. It clearly can be money. It clearly can act as insurance and clearly is an asset. But is it an investment? No. Now what? Well, yeah, I think you can have you might say that some bonds are an investment, they're insurance, they're money, and they're assets. Here's one that could be. You can have a type of bond that's a form of either it's a bond or it's a derivative that pays you if something happens. So that sense, it would be insurance. It would be an investment because the value of that insurance would rise or fall on the basis of what happened in the world. Could it be money? Yeah, it could be if it's a standard derivative product that they've made and it trades, then you could almost trade it, exchange it. Not really in every day, so it'd be hard for it to be money, but it could be at least money amongst big traders, I might imagine. And then it would be an asset on your balance sheet that you owned this derivative piece of paper that is worth X amount of money and it fluctuates based on its investment value. But that's the closest I think you get to it. It's more of an asset and insurance than it is money because it's hard. It's not, you're not going to go into the grocery store with that product, that piece of paper that explains your rights. And it's not really an investment because you're really counting on what the world does rather than what a company does. It's a good question. I don't think it's not desirable for something to be all four. I think what you want is you want to get the best asset, the best insurance, the best money, and the best investment. And if it's not any of the other three, who cares? Okay, Mark says, Ed Mall says, accumulating an asset, okay. Sure. I mean, the one reason you don't want to accumulate a lot of assets is you have a, usually there's a maintenance issue. The reason you don't want to own, like a lot of, this is, okay. When people talk about China and they say, oh, I said they're building infrastructure, we're building nothing. And I always say to them, they're building infrastructure that maybe they don't need, don't use, and in the collapse, they certainly won't need, won't use. And what are they going to do with a bridge that no one's been using for 2 or 3 years? Or a building that no one's in? You got to assets have a cost to carry. You got to keep them going. Well, if you're not making any money off a bridge, why do you want to keep maintaining it? The only reason you maintain it is so that you can charge on the toll. So owning a lot of assets, like let's say, for example, I went out and bought 10 houses. I got to pay tax on 10 houses. I got to pay insurance on 10 houses. but I own 10 houses. You got to be pretty rich to own 10 houses. Unless I'm buying 10 houses, you still have to be rich, but I'm buying 10 houses to get rent on them. Then those aren't assets. They are investments. So it makes more sense to hold more investments than it does assets. Now, when you own investments, you have risks. That's why you get insurance. When you own a lot of assets, you got to be rich to own a lot of assets, because you got to pay to keep them up. Even gold, you have to put them into storage and insure it. And it's not as much as and you don't have to pay taxes like on a house. But yeah, I think accumulating assets is something you do, how do I put this? The fruits of your investment should go into assets. How does that sound? Like you make a lot of money in investments, like you buy a lot of house, that you make a lot of income, then you take that income, maybe you put some of it back into investments, some of it into insurance, and then you buy assets with it. But I don't think it makes sense to own all your wealth in assets. The monetary aspect, says Mark, of PMs rise and fall depending on the manner in which the Treasury and banking systems regulates their trade. Yes, and also to the manner in which they value them and own them. I suspect they will grow as money in a financial crisis. Clearly, because but we see it in the. Someone asked the question, why is gold going up against some currencies? Because those currencies are becoming worth less than they were before, and therefore solid assets and things that can act as money go higher. Don't care about JPM, says Where's Barry. More worried about the debt and money printing equals reset of some sort. Yes, yeah, that's a very good point, Where's Barry. All these stories about gold-backed yuan and sovereign-sized gold buy and JP Morgan has this amount of silver and COMEX default, those are, to me, those are not reasons to buy gold or silver. Those are just hype stories of the month. A lot of them get recycled. That's not the reason. The reason, I think, to own any solid asset is because you need an asset. So whether it's ammunition, whether it's shelter, whether it's food, whether it's an ability to buy something, you want an asset. And gold and silver are insurance against the debt and money printing going awry. So if you have bonds, like U.S. Treasuries, they're supposedly safe, but maybe one day they won't be. If you had Turkish bonds, I think you'd have been smart to have also a gold account outside of the country. Yeah, so that's the issue. I don't believe in... See, all these stories about their opportunities, investments, gold and silver are set to skyrocket because of whatever. And if you realize that gold and silver are not investments, then you don't look at it that way. And you're not looking and waiting and listening to all these people with these stories about something's going to happen and this is happening. You're looking to make money as if it were an investment to go higher. If you want to invest, I would say, this isn't investment advice, because I don't think of this as gold as an investment, but if you want to make money in something that's going to skyrocket, that's when you buy equities and you look at, is this company or this ICO or this... Now, this could be risky, obviously, but those are investments. Investments are supposed to go higher. So, for example, Netflix comes out 10, 20 years ago, whenever it came out. Through their, whatever they do, Apple, whatever they do, whatever innovation they do, whatever people they hire, people they bribe, whatever they do, you're going to benefit or you're going to benefit by making money because the company made the stock go higher or did something that attracted investors. Gold doesn't attract investors. There is no Mr. Gold. There is no Gold LLC. It doesn't do anything. So when people get all excited about this is going to happen and that's going to happen, oh, okay. I don't. That's why I don't listen to those stories. They get people excited, so you buy a newsletter, you buy more, you buy, you know, I'm buying, JP Morgan has 800, and therefore I'm buying silver. Okay. Congratulations. That's not why I would own either silver or gold. Mark Lowry says, well, I don't see them as investment. I do see them as speculations through price appreciation. Yes, and I would say if you're going to speculate that silver is far more speculative than gold, historically. I don't know if you watched last night, but I went through that over the last 48 years, silver's gone down half the time and only gone up half the time, whereas gold has gone up 62% of the time. And also, silver, when it goes up, really has gone up, but silver has lost 40% in a year, or over 40% in a year, twice in the last 48 months. And gold has only gone down 30% once. Silver's gone down 4 times, over 30%. But the real killer for, if you want to look at silver as speculative, silver's best year was up 374%. Gold's best year is only 136%. So clearly there's a more speculative component to silver than there is to gold. Gold is far more stable. So yes, you could look at it as an investment, not as investment, but as a speculative asset. How's that sound? A speculative asset, Mark. PMs are not going up in value. That's right. It is the paper going down in value equals inflation. Right, but you got to remember, that's the same thing that's happening to other assets versus the paper fiat, like the beer or a book. I'm just looking around, or a car. Those are going to go up or down versus the paper as well. Drugs could be used as all. Don't think drug can be an investment. Drug could be an asset that people would hold, would want to buy. It could clearly meet the definitions of money as you can fungible, generic drug, different doses. You can break them into different, if they're tablets. It could be money. Insurance could be health insurance. If you get a toothache, you got aspirin, yeah. But I don't think that drugs could be an investment. Unless they're part of your seed capital to do something or other. I don't know. Drugs degrade and used by day. Yes, but for a period of time. That's why gold is the perfect money. As Warren Buffett says, you can leave it there for millions of years. It's still going to be there. Whiskey, wine, they can last 100 years, and that's good enough for your lifetime for money. But gold and silver are pretty much eternal, not so much copper. That's why they're better money. It is priced in US dollars, so people who use dollars will have a different perspective. Correct. Force majeure. Will FANGs do well in a recession? What do you think? I don't think so. I mean, those are consumer stocks, right? People... Well, take that back, because what's in FANGs? FANGs is Facebook, Amazon. Amazon should suffer, right? Because people wouldn't spend money. Netflix, people still buy stuff. They still entertain themselves. We saw during the Depression in the 30s that people went to the movies, so probably that might do okay. Google, I don't know if it can do any better or worse. People use the internet. Well, Google might go down because lack of lower advertising revenues, right, if you had a recession. And what is S? Don't remember S. Yeah, they might. I don't know if they're recession-proof, but you can make arguments that they wouldn't get clobbered in a recession, other than maybe Amazon. But then Amazon, I think, does well because it has like CIA's cloud storage and other things, so it's hard to say. Bogus. I thought Jim Sinclair is Mr. Gold. Yes, but he, as you've seen, he can't make gold go to 50,000, right? Are PMs dying as an asset class? That's an interesting question. And the reason I think they've gone down is because they're not viewed as money in the same way they once were, automatically. I mean, there was automatically a money premium. Tonight's topic was actually going to be, I didn't finish the research on how much silver was once used to mint money all over the world. And that's one of the silver is in less demand now than it was in the 40s and 50s, when pretty much every developed nation, and even some underdeveloped nations, issued silver coins for people to use. It was hundreds and hundreds of millions and billions of ounces of silver. And now silver is an asset class. It's not money. People get offended. Oh, what are you talking about? It's not money. Silver's been money for 5,000 years, period. It's not. It can be and it was. But that's the point. if countries were still printing silver, they'd have to change. Think of it. They'd have to change if they were to go out and issue them today, you could not issue dimes, quarters, and half dollars. They basically have to be like $1, $20, $30, $40 coins because of the value of the silver now. And in fact, they'd have to be even higher because there's just not, I don't think there's enough silver around now for every nation to have the amount of silver coins relative to their population that they once had. So I think that's driven the asset price of silver down because it doesn't have the same demand, built-in demand. Sovereign countries needed it to make coins. All right, let's see what else we got. Seems like people are catching on the ploy to buy. Certainly younger people aren't getting into them. Well, the reason younger people aren't buying gold and silver, I'm sure there's plenty that are, but is because they're used to digital stuff. And they've never had a digital catastrophe. Their Netflix always works. Their phones work. They buy stuff with their phones. They listen to music on their phones. They never hold a record, a CD. They don't own physical assets. And they view, in some respect, they do Airbnb. They ride Uber. They don't necessarily view assets as something that either they can afford to buy or that they even want to buy. American Supertrend. Most of silver spikes were caused by events or actions not because there was a real reason for the rise. That's right. Because silver doesn't do anything. Silver reacted in those events. We had those spikes just as gold. Gold and silver at the end of the day are gold and silver at the end of the day. I know Warren Buffett thinks that's a disadvantage. I think that is a comforting fact. In a world where people can screw up, companies can screw up, debt can default, and so on. Port wine, regular wine goes bad, Dr. Modesto. Yes, fortified wines are going to last longer, and spirits are going to last even longer. But, I mean, you can drink a 1982 bottle of wine, good wine, if it's properly stored. But you're right, you're not going to like take that and throw it in the back of the truck and bring it to the grocery store and try to exchange it, because moving fine wine, and if it gets a little warm, you're going to destroy it, especially an old wine like that. But whiskeys, cognacs, vodkas, they can last a long, long time. The difference is, though, once you can't reuse vodka. Once you drink it, it's gone. Cannot be recycled. Whereas gold, I can wear my gold ring my whole life and then pass it on and someone else can wear it, but you can't do that with your whiskey. Yep, the end of film photography has hurt silver, and it basically got picked up. That demand, if you look at the charts of how much demand was in for photography and film, the silver screen, remember that? It got moved into industrial demand almost seamlessly. It was almost like the exact amounts moved into solar panels and electronics. Yes, and that silver is probably lost forever, says Dr. Modesto. A lot of that's silver. But today, when people say that the silver that they use today is lost forever, man, it's not. Apple, Samsung, they all have reclamation programs for the precious metals that they have in their electronics. Full name, they could have a gold or silver strip in any note. Yes, that's a very good point. When you have a coin, you're very thin. In fact, I've seen that. There's a private company that does something like that. They give you like $1 worth of silver on a note, and it says $1, and it's got a strip of it. I don't know how many grams it is, but yeah. Why does the mint set the face value of, say, a $1 gold buff of 51 at 100 or 500? Well, here's an interesting thing. Canada actually does that. Canada, the Canadian silver maple leafs are $5 instead of the U.S. is $1. I don't know how they come up with the number, but it's just what they do. I don't know who determines that or what determines that, but they had to have some face value in order to be considered a legal tender, and that's just what they came up with. Also, when they came up with it, it was closer to the face value, because remember, this is 1986 when they came up with the American Gold Eagle, the bullion coin. And gold at the time wasn't $50 an ounce, but it was a lot closer. It was a couple $100 an ounce. Military designing new batteries using silver, 3D printed medical tools will be okay. This idea that there's so many more uses to come is a very general statement that people pumping silver like to say, that they think that somehow that's going to provide some type of floor. It's not, because you have to look at how much silver is going to be needed for these new useful applications. One of the is in yoga pants, like in nanoparticles. There's not much required for these medical applications. There's a lot of gold applications for cancer, but they're using nanoparticles. They're not pouring tons of silver into yoga pants or into medical devices. A lot of, silver is very good for being antimicrobial. So you have silver. I saw a thing where you have fake knees. So instead of putting whatever they use now and they worry about infection, they put in a silver knee. And then the knee doesn't get infected. All right. But I mean, are they going to use 50 tons a year on that? No. I mean, 50 million ounces on that? Probably not. And even if they did, is that really going to move the needle? So the idea when they give you these general rosy statements about how valuable and useful silver is in our lives, one of the ones I like to always throw back is the idea, well, electronics requires silver, and we wouldn't have electronics or even Bitcoin without silver. Yeah, but the amount of silver used in electronics in 2010 was 310 million ounces, and the most recent number, according to the Silver Institute, was 230 million ounces. So it's declining, the amount of silver required, and they do thrifting in solar panels to use less silver. So I don't buy these general arguments that silver is so useful and they're finding more uses for it every day. Buy my silver. That doesn't make any sense to me. Because you have to know how much is being used, what the projected amounts are being used, and what the projected demand is versus the supply. They're not giving you those numbers. All right, let's see what else we got. That's a good point, says Rich Barry, in case it goes lower than the face value. I don't know if you guys remember this, but the Canadian Mint a few years ago had these very interesting coins. They slapped on face values of like $10 and $20 on quarter-ounce silver coins. So the coin was worth more in Canadian dollars than the silver bullion was worth in it, which is the flip side of a silver Canadian maple leaf having a face value of $5 and having $20 worth of silver. They would have a $20 face value coin with a quarter ounce of silver in it, so it was like for like $4 or $5. UK notes have always had a metal strip, yes, but those strips were for counterfeiting purposes, not to give them a precious metal backing. EVs need silver. What are EVs? Help me out, bogus fiat. Jack Horser, 5-to-1 was a typical exchange rate when we were on a gold-silver standard. That's why the Swiss 5 franc is about the size of a U.S. silver dollar. Yes, and remember what you're talking about. I wouldn't even use the word traditional. A lot of times in history, if you go back and you look at these 16-to-1, 9-to-1, they're not arbitrary standards. They were based on, yes, the relative rarity, but they weren't based on the market price. They were based just because they had to come up with some standard. So that's why when people say it has to go down to 5-to-1 or 1-to-1, the relative rarity argument doesn't work in a market, free or manipulated, because they're not, if they're not both being used for the same purpose, i.e. they're both not being used in a government mandated fiat currency or gold-backed or silver-backed currency, there's no need for them to have relative values based on relative rarity. Coffee would be a great asset and currency for a total SHTF scenario if you live in a non-growing area. Absolutely, Walden Tree. And actually, the way you want your coffee there is not in ground, obviously, and even not in whole roasted, but in green. The green coffee beans, they say, can last 20, 30 years as long as you don't roast them. Force majeure, do a gold finger and contaminate the world's gold supply. Yep. Nuke it. Plated silver is typically 2/millionth of an inch thick. Yep. Dr. Manesso, coffee. I don't know. People would just add caffeine powder to a locally grown drink. That's assuming that the only reason people drink coffee is because they need caffeine. Now, there are other substitutes. For example, in Argentina, Uruguay, Brazil, they drink mate, which is a caffeinated type of beverage grown from some type of weed, and they drink it out of a gourd. It's interesting. Yeah, I mean, there are substitutes for coffee, but I think if people want coffee, I think you can find they're acceptable. They would be traded, and you could trade coffee beans with people. There may be people who would find alternatives. It could become a luxury product. As a baby, I was fed with a silver spoon, says American Supertramp. And many babies were. That was common. To have you would give a gift, a baby silver spoon. Carve the kid's initials in it, put his birthday on it, and the mom would feed the baby with the silver spoon. Could they manufacture caffeine? All right, let's see. Yes, Dr. Medesco. If all you're looking for is caffeine, you can find caffeine. You can just take caffeine pills. Coffee is embedded in many cultures, just like, now it's not as long as gold as in India. I mean, people think of the French and the Italians and the Turkish drinking coffee for like, they didn't drink coffee in the Roman era. They didn't even drink coffee, I don't even think, during Napoleon's time. I think the coffee craze happened in the 1800s. The cafes, they didn't have cafes, in the 1500s in Italy or France, but it has become part of the culture. So it's not just caffeine, it's part of an experience. And that's why if you look at Starbucks is purely cultural. Now that culture can be washed away and say, look, we don't need to go to Starbucks, we don't need coffee. But Starbucks is because of coffee. Not that we need Starbucks, it's because people need coffee or want coffee that there's a Starbucks. Electric vehicles. Yeah, there's plenty of uses for silver, but my point is there's plenty of uses for all of the metals. Plenty of uses for copper, piping. There's so many uses for copper. So many uses for tin, aluminum, zinc. The argument, they're finding more uses for silver every day. Same with all the metals. Born with a silver spoon. Pretty sure green beans. No. 0 F's given. Pretty sure green beans would yield a bitter taste. That's why they're picked when red. I'm not an expert on this. All I know is that over the last few years, I have bought the... Hold on. I have been buying, and actually, I have one bag of green beans. And this one says it expires this year, which is not true. And it says green unroasted. I'm not going to open it and look at it because I've bought this before. But I do know I've roasted these before. A little $25 roaster. Spins around, takes 20 minutes, and it's delicious. I haven't been doing it lately. I've got this because I figured I'll keep that bag for the SH. But yeah, green beans. I don't know if, maybe some of them are red when picked, but I've roasted the green ones. They're not green like they're not green like dinosaur green. They're very almost like white. Yeah, bullets for acid. Absolutely. If you don't have a means to protect your assets in that scenario, then you won't have any assets. Siege of Vienna was when coffee was introduced. There you go. Okay, so around that sounds good, Dr. Medeska. I was talking out of school there by saying 1800s. Yes, it was the Turkish, the Ottoman Empire. They were the ones. They're the ones who also had the tomato. Romans didn't have tomato sauce and all that stuff. Pizza wasn't invented, this I know, until like the 1800s, late 1800s, when Queen Margherita came. And that's how you got the pizza margherita. Yep, 1583. Well, that's when the Poles came down and the Germans to attack the Ottomans in 1583, Vienna. Yes, so it's the Turks bought the tomato and the coffee. But the point being is that there's not thousands of years of coffee drinking history. It's hundreds of years. So yeah, people could dispense it. But speaking of electric vehicles, will rare earths become an asset class? Absolutely, if you have them. You know what I did? I bought a box of them. Those they're not expensive. Oh, here they are. I got a box of them. The rare earth magnets. When I heard that they were putting the tariffs on the Chinese, I think I paid $7 or $8 for them. I'm hoping to make thousands off of these magnets. Yeah, rare earth. China has most of them. 1683. Yeah, okay. Off by a century. I got the point. All right, only a century. Well, in time, it's In your life, it's more than a lifetime, but in history, it's a blink of an eye. Jake Howard, so the shells are red when picked. The bean is still green on the inside. Well, there you go. Yes, and Rare's Barry makes a very good point. Rare earths aren't rare, but they're rare geographically, and most of them are in... There was a company, Mollypean or something, I don't know, a few years back. They tried to get it going in California. It didn't work. That's right. Rare earths are just called that. Stacking magnet, that's what I got. I heard that you can use these magnets. You roll them across a silver coin and it goes slower. And if you roll them across another coin, they go faster. It's supposedly some type of counterfeit test. But I heard if it's silver plate, it'll do the same slowness, so you really can't tell. There you go. Coffee houses with the craze in the 17th and 18th century Europe. That makes sense. Coffee was brought over from South America, so not consumed beforehand. I have to apologize. I am not a historian on coffee. I know generally that they haven't been around for thousands of years drinking coffee in Europe. I know it was that a lot of the coffee, that's what I say, Arabica. What is the coffee they call it? Arabica means Arabic. Yes, and coffee beans are grown in Brazil. You get Brazilian coffee beans, Colombian coffee beans. All that seems to coincide with post-Renaissance. Yeah, Rare Earth was one of the first white bands signed by Motown. I just want to celebrate, Dr. Modesto Esquire. I remember them. All right, well, thank you everyone much for your great conversation and comments. Force. Coffee originated in Ethiopia. Well, there's that too. Mocha in Yemen, I believe. Average white band? No. Average white band was not Motown. At least they may have been, but Pick Up the Pieces was on Atlantic Records. And Atlantic Records was also, Roberta Flack, I believe, was on. They weren't, all those artists of that period weren't all on Motown. Some were on Atlantic. And that was that guy who also signed Led Zeppelin. Led Zeppelin was on Atlantic Records. All right. We're straying a little too far off the course. We've been on it for an hour and 12 minutes. Thank you very much indeed. And we'll talk to you tomorrow night, 8 o'clock Eastern Standard Time. Be sure to go over to BitChute, sign up there, minds.com, small gold channels, gab.ai, Twitter, Facebook. The best one is smaulgld.com. And you know why smaulgld.com is great? Because that's where you can buy a small gold game-changing mug with a free eraser that I'll put in there if you buy the classic and super classic mug. Whiskey, good investment. Yes. Arabia, yeah, that's the good stuff. Robustus crabby subspecies. Doesn't the cost to produce provide a base price? I'll take that question, Garletto. Not necessarily. A lot of people talk about the base price. If the price goes below, the cost of mining goes higher, then the price will have to do an equilibrium. Not necessarily, because most of, especially gold demand, isn't taken up from new production. That just adds, because there's so much stock already. It's not like the companies or the investors are waiting for the gold to be shipped from the mine, and if they don't get it, then there's no gold being traded. All those gold flows, that's all existing gold. So I think I read somewhere that the amount of gold that they add each year is about between 1% and 4% of the overall gold supply. So also, if the cost of production is higher than the price, they still mine. It would have to be a prolonged period. So it's not like, well, when the price of gold goes to $880 or $900, and that is the price of the miners, they're all going to stop mining, and then there'll be no gold, and then the price will go up. Won't happen that fast, and the price might not stay down that long. The miners are very reluctant to shut down operating mines. They have some mines in South Africa. They're still mining at $2,800, $2,900 an ounce. So I wouldn't count on that as being a instant indicator of price. A lot of people count on that, and they think that that's what the price is based on. That's an indicator, but it doesn't just happen that way. All right. Bullets 9x19. All right, guys. We'll save Benzadrek's question for tomorrow night. What the heck is going on with the silver price? Thanks, everyone.